Hi, this is Joseph. Today it is November 2nd. It's Tuesday. We're going to review the HL30 trade again as we usually do. So these are the trades of the day that are really, really easy to execute. All of my coaching clients learn this particular strategy first thing right off the bat because it's so easy. You can learn it in about 15 minutes or less. I know it sounds like a big promise, but I guarantee that if you can't learn it in 15 minutes, I'll do a private Zoom session with you to teach you to make sure that you're actually able to use it. It is really that easy and it's that effective. But it makes money almost every day. So just about every single day, and I can't promise that it's going to be like that every day. Obviously, if we go through Christmas, things might be a little bit different where we could see tight ranges of consolidation. But for the most part, just about every single day, we're going to see an HL30 that will set up on at least one of the majors, if not all three. Sometimes we'll see HL30s just like this one, and it'll set up on all four of the majors, and we'll be able to get 240 pips on the trade. So let me break it down and show you what happened today. This is actually the euro dollar. So this is the euro dollar. The entry right here is with the HL30, it's a very specific candle pattern. So inside of my trading course, I have this one particular module. Inside of that module, you're going to get a download checklist. So you're going to go step one to confirm and find the HL30. Step two, you need to confirm it with the indicator and make sure that it's within the previous day's ranges, and then execute the trade with the appropriate stop loss and target. You just rinse and repeat. That's all you have to do. It's really, really easy. You won't make any mistakes with this checklist. So basically what we're doing from the time we get into the trade, we're using a 20 pip stop and a 20 pip target. So 20 pips if we're going to get in here at the 1600 level. This candle closes right here. Let me go ahead and get that reading for you. So this candle closes at 1.1600, right on the number. We're going to use a 20 pip target, so our first target is going to be 80. Now if it hits the first target here at 80, we're going to earn 20 pips. But if it continues further, we could trade it for an additional 20 pips. That would bring the next target down here. The second target would be down here at 1560. So effectively what we do is we open up two trade orders. We execute two positions. And my recommendation is that if you're using, let's say, for example, a mini lot, I would cut that mini lot in half, and then you could execute two open orders. The reason that you want to do that is you want to take advantage of the times that price continues to trend so that you could earn potentially 60 pips. Let me explain. So if I have, this is what I did. So my coaching students do the same thing. They'll execute two orders. If I have one open order here, I'm going to trade it and set the take profit level at 80. And then I'm going to set the second open order with the take profit at 60. Now, once it hits the first target, I then close that first position, and then I can move my stop loss. Remember, my stop loss was a 20 pip stop loss. So if I'm getting in here at 1600, my stop loss is going to be the 1.1620 level. That's 20 pips from the entry. Never really came into question here. This spike right here, that happens every once in a while. We're going to see spikes where it'll retest the stop loss area, but we don't have to worry about it. It only went as high as about 13 right there. That is usually, that's not usually the case. That's an unusual situation, but it does happen. You need to prepare for it. But nevertheless, a 20 pip stop is really, really affordable. So this works. It continues. And all it's doing is just retesting the previous day's high. That's all that we see here. You can see with these candles, none of them are closing above that high. And even if they did just a little bit, it still doesn't mean it's going to be a breakout to the upside. So everything is fine. You set it and forget it. You leave it alone. The second target, again, or the second lot, the second open position is set for that second target. I would then move my stop loss once it hits the first target on that second order, that second open position. I would then move the stop loss at a break-even stop. So right now you can see that price hit the first target here at 80 way back over here. So a while ago it hit 80. I closed out my first position. So now I still have a second order that's open. Now I moved my stop loss from 20 to 1.1598. 1.1598. What that means it's a break-even stop loss, so that if it doesn't go any further or any lower than where it is right now and it goes back up, as soon as it hits 1.1598, I close that second position at zero, maybe even with a little small profit, but I don't give back any of the profits from the first target. That's how we trade this. Now let me show you what happened on the dollar Swiss. The dollar Swiss, this was the other HL30 that we took today. The dollar Swiss actually hit both targets and then went a little bit higher. So again, getting in here, this is my candle pattern that put me into the trade, 0.9093. I use a 20 pip target. So my first target is going to be 13. My second target is going to be 33. My stop loss is going to be down here at 73. So you can see again, it moves up, doesn't hit the first target, pulls back down, retests support, not like it did on the euro dollar. Little different, trading activity there. It happens. But nevertheless, we were never in any jeopardy for this trade to actually hit that stop loss. I'm sorry. So it hits the first target here. And again, I trade this with 2 open orders. The first position closes there at 0.9113. Once it hits that first target, then I can change the stop loss from 73. I get in at 35, so I'm going to set the stop loss, a break-even stop loss, at 37, a 2 pip spread. So that way, again, I protect my profits on that first lot. But that's not what happened here. Once it hit the first target, it just kept going up and went through to the second target. So now both of my positions have been closed out on this trade, the dollar Swiss. So that means I earned 20 pips on my first position, and I earned 40 pips on my second position for a grand total of 60 pips. I trade standard lots. This earned me $600 today. This one so far has earned and paid me $200. If it drops and it comes back down there to 1560, please be careful. I'm not saying to short it here. I don't know what's going to happen at this point. That's why this method is so effective by executing it in this particular manner, is that we're taking advantage of the definite possibility that it's going to hit at least the very first target, but in some cases it doesn't always hit the second target. And if it does, again, as the trend continued like we saw here on the dollar Swiss, we want to take advantage of that. So that's why we do it in this way, opening 2 positions and closing them out like this, so that way, again, if we don't ever see the second target, we still lock in profits here. I'm already profitable on this trade. It doesn't matter to me at this point what happens. I would certainly like it to go down there to the 1.1560 area so that I could close out that trade with an additional 40 pips. But if it doesn't, I've already been profitable. I've earned 60 pips here on this trade and 20 pips here on this trade so far. Just between these 2 currencies, with these 2 trades, I've earned 80 pips so far today. Now, if you're trading mini lots at $1 a point, that's approximately $80. There's nothing wrong with that. That's a good trading day. But certainly if you're trading standard lots, that would be $800. So that's a pretty good, effective strategy. This HL30 trade sets up very often on all 4 of the majors. And very often on those days, it will hit all of these targets. And we could close the day with 240 pips for just a single day of trading. It's really easy. It's set it, forget it. You can't mess it up once you have the checklist in your hands. If you want to learn more, go to my website, forexdaytradingacademy.com. When you land there, scroll down past this. This will take you to the information page if you're interested in my coaching course. But I got a free gift for you. I'm going to teach you this HL30. You can download this ebook for free. It's a limited time offer. I'm not going to leave it up on my website for very long. And I'm going to include some videos so you can see the HL30 in action. You can see some of those days where we're earning 240 pips. You can easily make 20, 60, and possibly more than 100 pips in a single day. So far, I've earned 80 pips, as you saw with just those 2 trades. But very often, this technique sets up on all 4 of the majors. Really, really easy trading strategy. You can even use it on the pound yen and the euro yen. It just requires a different stop loss and a take profit level. So go to my website, forexdaytradingacademy.com, and you can download this free ebook for a limited time. You'll learn how to use this strategy. I'll email you some videos so you can see this thing in action. You really don't want to miss this. Thanks for watching.